All right, Talk Tickers is back, and we are ready to dive into some earnings calls.
Always exciting.
Today, we're looking at Gap Inc.'s Q3 2024 report.
Should be interesting.
Definitely interesting, especially with that 12% stock surge after the call.
Yeah, that definitely caught my eye, too.
You know, something big must be happening.
Big things.
I've got the transcript and all the latest stock info right here.
Yeah.
Ready to go.
Awesome.
See what we can find. I have a feeling this is going to be anything but a typical retail story.
Yeah, retail's been struggling, but Gap seems to be telling a different story for sure.
Well, the apparel sector is down overall, what, like 1.5%?
1.5%, yeah.
But Gap Inc. is posting its fourth straight quarter of net sales growth.
And not just growth.
Right, not just growth.
But also market share gains.
Across all of their brands.
All of their brands for 7 straight quarters now.
Gap, Old Navy, Banana Republic, Athleta, they're all doing well.
It's pretty impressive how they're bucking the trend.
So what's the secret here? What's the magic formula?
It's a combo of things, I think.
Like what?
Well, for starters, they've been dealing with a lot of challenges.
Challenges.
Yeah, like those hurricanes.
Oh, right.
And tropical storms that hit.
And that port strike definitely had an impact.
Exactly. All things that could have really hurt their progress.
And yet they're thriving.
Exactly.
So there has to be something more.
There is. They call it their brand reinvigoration playbook.
Okay. Brand reinvigoration playbook.
It's basically their strategy for turning things around.
Interesting. So how's that play out across their brands?
Let's start with Old Navy.
The value play, family friendly,
Okay.
flat comps this quarter, but still gaining market share.
Yep, doing well in men's and women's apparel.
They're bread and butter.
But their kids and baby business took a hit.
Probably because of all the crazy weather.
Yeah, those are wear now categories, very dependent on the right weather at the right time.
Makes sense.
But here's what I find interesting.
What's that?
They're going all in on activewear.
Activewear. That makes sense. I mean, everyone's wearing yoga pants these days.
Right, athleisure is here to stay, and Old Navy wants a piece of that pie.
Smart move, but can they really compete with the big players like Nike and Lululemon?
They're already a top 5 player in that market.
No way.
And get this, Old Navy is now the 3rd largest women's active brand in the U.S.
Wow, that's a big jump. How'd they manage that?
It seems like they're focusing on families who want affordable and stylish activewear.
Yeah, that's a niche they could definitely own.
Absolutely.
Okay, so Old Navy's doing their thing. What about the OG Gap brand?
Gap is having a moment, too.
It seems like a 3% increase in comps.
Their 4th consecutive quarter of growth.
And their 6th straight quarter of market share gains. Impressive.
Definitely not your parents' Gap anymore.
So what are they doing differently?
Well, they've launched some really smart marketing campaigns.
Like what?
Like that denim-focused Get Loose campaign with Troye Sivan.
Okay, I've seen that one. Very cool.
It's resonating with younger audiences, which is exactly what they need.
And they're doing those collabs with brands like Mad Happy and Cult Gaia.
Which have a huge following with Gen Z and millennials.
Yeah, it seems like they're trying to appeal to both new and old customers.
Exactly. A tricky balance, but they seem to be pulling it off.
So they're attracting a new generation without alienating their loyal base.
Exactly. And they're not just relying on flashy campaigns.
What else are they doing?
They're also laser focused on improving the customer experience.
Customer experience? In what way?
Across the board, from refining their digital platforms to testing new store concepts.
Makes sense. It's not just about the clothes anymore.
Right. It's the entire brand experience that matters.
Okay, so we've talked about Old Navy. We've talked about Gap. Now let's talk about the elephant in the room.
Banana Republic.
Banana Republic. They've been trying to figure out their place in the premium lifestyle market.
For a while now.
With mixed results.
It's still work in progress, but there are signs of life.
Signs of life.
Especially in the men's business.
Okay, what's happening there?
They saw strength across categories like pants, knits, sweaters, and outerwear.
Well, that's good, especially as we head into the holiday season.
Yeah, men need those cozy winter clothes.
For sure, but what about the women's line?
That's where they need to focus their efforts.
What's the problem there?
Fit and assortment are the main issues.
Okay, so they need to make sure the clothes fit well and that they have the right styles.
Exactly. Women are picky about their clothes.
Makes sense. But they did mention a shift towards social media and influencer marketing.
Yeah, they're trying to get the brand back into the cultural conversation.
It makes sense, but is it enough?
It's a good start, but they need to translate that online buzz into sales.
Right. They need to give people a reason to choose Banana Republic over other premium brands.
Especially in such a crowded market.
So it's a tough road ahead for Banana Republic.
It definitely won't be easy.
Okay, let's move on to Athleta, my personal favorite.
They're back in the game with a 5% comp increase.
5%. That's huge, especially after a period of stagnation.
Yeah, it feels like a major turning point for the brand.
So what's driving this comeback?
Product innovation and targeted marketing seem to be the key.
Okay, so they're making products people want, and they're getting the word out effectively.
Exactly. New product launches are resonating with their core customers.
And they're attracting new customers through smart digital marketing.
Especially on TikTok, where they're becoming one of the fastest growing sportswear retailers.
Wow, TikTok, that's impressive.
They're really tapping into the power of social media.
It seems like they're doing everything right.
They're hitting that sweet spot of appealing to existing customers while attracting new ones.
That's the dream for any brand.
Absolutely, and it shows that they're adapting to changing consumer preferences.
They're not just selling workout clothes, they're selling a lifestyle.
A lifestyle that aligns with the growing focus on wellness and self-care.
Smart move. So we've covered the brands. Let's get into the nitty-gritty of the financials.
The numbers tell a compelling story, too.
Gap Inc. reported a 140 basis points expansion in gross margin. That's impressive.
Can you break that down for our listeners who don't speak Wall Street?
Sure, basically it means they're making more profit on each dollar of sales.
Okay, that's good. So how are they doing that?
A few factors are at play.
Like what?
Disciplined inventory management.
Which means?
They're not overstocking and having to resort to big discounts.
Got it. Makes sense.
Reduced promotional activity, again, protecting their profit margins.
It's smart.
And they locked in lower commodity costs earlier this year.
So they're being strategic about their buying, pricing, and promotions.
Exactly. They've definitely upped their operational efficiency game.
So they're operating more efficiently, but is it sustainable?
Well, that's the big question, isn't it?
It is. And another big question is their cash position.
Cash flow is king, right? Especially in this market.
Absolutely. It can make or break a company.
So Gap Inc. is sitting pretty with $2.2 billion in cash.
Wow, that's a nice cushion.
Plus, they've generated $540 million in free cash flow so far this year. That's impressive. What are they planning to do with all that cash?
Well, it gives them a lot of options.
Like what?
They can invest more in their growth strategies.
Smart. Keep the momentum going.
They can reward their shareholders with dividends.
Always a good move.
And they could even buy back shares to boost their stock value.
Yeah, that's a classic sign of a company in a strong position.
Exactly, especially when things are a bit uncertain economically.
And speaking of the economy, Gap Inc. actually raised their outlook for the rest of the year.
Yeah, they're projecting growth in sales, gross margin, and operating income.
They're feeling confident.
But is it warranted? That's what we need to figure out.
So many factors at play.
Can they handle a potential economic slowdown?
Will consumer spending hold up?
Can they stay ahead of the trends?
Especially in the fast-paced world of fashion.
And can they keep delivering a seamless customer experience online and in stores?
So many questions, but that's what makes this so exciting.
It's a fascinating story for sure.
Gap Inc. is at a crossroads.
They've made a remarkable turnaround.
But can they keep it going?
Can they become a true retail powerhouse?
What do you think? Can they pull it off?
It's tough to say for sure. They're definitely agile and willing to adapt.
Which is crucial in today's market.
Their focus on financial discipline is also encouraging.
But retail is constantly evolving.
New challenges pop up all the time.
So we'll have to wait and see.
That's the fun part, though, trying to figure it all out.
Absolutely. Well, speaking of trying to figure things out, it's time for our favorite segment.
This is not financial advice.
Remember, folks, this is just for fun.
We are not financial advisors.
So don't make any investment decisions based on what we say here.
This is purely for entertainment.
All right, hit me with your most outrageous but plausible trade idea.
Inspired by Gap Inc.'s performance.
What you get?
Okay, hear me out.
I'm listening.
What if Gap Inc. spun off Athleta?
Spun off Athleta
Here's
into
what?
its own publicly traded company.
Whoa, that's a bold move.
But it makes sense. Athleta is their star performer right now. True, they're killing it.
And a spin-off could unlock a ton of value for shareholders.
How so?
Athleta could focus on its strengths, attract investors who are specifically interested in athleisure.
And potentially grow even faster.
Exactly. And Gap Inc. could streamline its operations.
And double down on their other brands.
It's like hitting the reset button for everyone.
I like it. Bold, strategic, and potentially very lucrative.
But let's push it even further.
Okay, I'm intrigued. Let's hear it.
What if, in addition to the spin-off,
Yeah.
Gap Inc. went on a strategic acquisition spree?
An acquisition spree. Who would they buy?
Maybe a trendy streetwear brand or a digital native company that's crushing it online.
Interesting. That would definitely signal a commitment to staying ahead of the curve.
And diversifying their portfolio.
So we've got a spinoff and an acquisition spree.
We're talking about a retail giant making power moves.
It's a wild scenario.
But not entirely implausible given their recent performance.
Remember, folks, this is all hypothetical.
Pure speculation, but it's fun to think about.
Absolutely. The business world is full of surprises.
Sometimes the boldest moves pay off big time.
All right, let's step back from the hypothetical for a moment.
And talk about the bigger picture.
Gap Inc.'s transformation is more than just a business story.
It's a testament to the power of reinvention.
What lessons can other companies learn from their journey?
It's a reminder that no business can afford to be complacent.
No matter how successful they are,
You have to adapt, evolve, and be willing to shake things up.
stay relevant, embrace change, challenge the status quo.
Disrupt yourself before someone else does.
Gap Inc. took a chance by bringing in a new CEO with fresh ideas.
And they made some bold moves that seem to be paying off.
Disrupt or be disrupted, that's the mantra for today's business world.
But let's not forget the human element.
Gap Inc.'s success isn't just about numbers and strategies.
It's about connecting with people on an emotional level.
So what's the secret sauce to their brand revitalization?
They've tapped into broader cultural shifts.
Like the focus on wellness, inclusivity, and self-expression.
They're not just selling clothes, they're selling a lifestyle.
An aspirational image that resonates with customers. They're understanding what people care about.
And reflecting those values in their brands.
Creating a sense of community and belonging.
Making people feel seen and heard.
And they're doing it authentically.
Which is crucial in today's world.
Okay, let's do a quick recap for our listeners.
What are the key takeaways?
Gap Inc. is on the rise, showing impressive growth, market share gains, and strong financial performance.
Across all their brands.
They're doing this through their brand reinvigoration playbook.
Focusing on product innovation, targeted marketing, and a better customer experience.
And they're backing it all up with financial discipline.
Giving them the flexibility to invest in future growth.
But the big question is, can they sustain this momentum?
Only time will tell.
It's going to be interesting to watch.
As a reminder, this is not financial advice.
Always do your own research
And consult with a professional.
before making any investment decisions. Now for our final thought.
Let's leave our listeners with something to ponder.
Gap Inc. has shown that reinvention is possible.
Even for iconic brands that have lost their way.
What other companies could learn from their playbook?
It's a good question. Yeah, there are a lot of brands out there that were like huge.
Right, like cultural icons.
Exactly. And now they're struggling to keep up with,
Changing tastes.
yeah, and the whole digital landscape.
It's a different world out there.
Could they use a similar playbook to get back on track?
I mean, it's a tough challenge.
For sure.
But Gap Inc. shows it's not impossible.
It takes a lot of work.
Vision, strategic execution, really understanding the modern consumer.
And maybe a little bit of that disrupt or be disrupted attitude.
Right, you got to be willing to shake things up sometimes.
Sometimes you got to break things to fix them.
And who knows, maybe some of our listeners will be inspired to lead those transformations.
Yeah, maybe they'll be the next big disruptors.
The future of retail is full of possibilities.
Absolutely. Anything can happen.
Well, folks, that wraps up our deep dive into Gap Inc.'s Q3 earnings call.
We covered a lot of ground today.
We talked about brand revitalization, financial performance, even threw out some wild trade ideas. New questions to think about.
Just remember, this is not financial advice.
Do your own research. Talk to a professional before making any investment decisions.
Always a good idea.
Thanks for joining us on Talk Tickers.
It's been a pleasure.
Be sure to tune in next time for another deep dive into the world of earnings calls.
We'll see you then.